Hello friends, today we are going to see one information on the ULIPs. Why do you think ULIPs are good? How much returns are possible? How much returns has come previously? How much returns can come later? If you invest now, how much returns are possible? Of course, returns are not guaranteed, but we can see the previous information and understand how the ULIPs are generating the great returns with one example. We took one policy. My spouse, Gentakutti Hemalata, took policy on 27 January 2008. What is the policy? Policy number is 008555299. Name is Kotak Smart Advantage. Okay. How much invested? It is actually premium is 40,000. How many years? 5 years. Sum assured is 4 lakhs. Totally premium payment term 5 years. Okay. Sum assured 4 lakhs. What is this fixed advantage fund benefit? The first year premium amount is not invested into mutual fund. They keep it aside as a guarantee purpose. That's why it's called fixed advantage benefit. It means out of 5 years, first year premium is not considered for the fund. Please note down, this is important one. And there are many funds are available, but especially one fund we invested is opportunities fund. What does it mean? Wherever opportunities are there, that fund try to identify and invest into that companies. That's why it's called opportunities fund. Of course, there is a bond fund also there and dynamic for also. There are different concepts. Bond fund means basically they invest into debt funds. Dynamic for months, suppose such amount you invested, then 20% returns has come in from equities. Then they take out some portion of it, they put it into bond. Then once again, that equity fund amount has moved to another some 20%. They can take out and put it in debt. It means trying to take out the benefits from the equity and putting into debt. This is called dynamic for fund. There is small concept. It means some sort of protection will be there, because debt funds or bond funds will be generating the certain returns like a 6 to 10% somewhere, and not much risk also. But equity, that opportunities fund, it can generate more than 10% or 15% also, but there is a little high risk, right? Because stock market can go up also, it can go down also. In this way, ups and downs are possible. If you are able to take the risk, then you can go for equity funds also. We took opportunities fund, okay, full amount invested. This is what selection, of course. Of course, these funds can be changed later also by using the switching option. Now, if you see here, there is a sum assured. Death benefit also there, higher of basic sum assured or fund value, whichever is higher, that is the sum assured. Here we already saw basic sum assured and fixed advantage fund also. 40,000 first year premium allocated towards the fixed advantage fund purpose. Now, what are the funds? Funds already we saw. There is a bond funds, dynamic bond fund, opportunities fund, dynamic four funds are there. So how they invest also, you can see here. What is the minimum amount and maximum amount? Entire, let us say, fund is collected certain amount. How much they should go for bonds? What is the minimum and what is the maximum? These are the criteria in the bonds. Why I am telling is the funds, certain funds generate higher returns. For that purpose, I would like to take opportunities fund. If you look at opportunities fund here, maximum 100% into equities. Can you see here? Investment in equity shares related thing, 100% can go. When they'll go, when they think market is very good, they can invest entire amount into equity. But if they think market is going little down and sometimes ups and downs, right? If they think it is little downside, what they can do, they can take out some 25% and put it into debt. In the sense, 70, minimum 75% they should stay in equities, but 25% of the equity amount can be moved to the debt instruments. Why? Debts are a little safer, right? Because the bonds, right? Corporate bonds, other things also similar to FD. So it is little safer. So this is the way that fund manager can try to increase the exposure whenever they think opportunities are there. Whenever not much opportunities, they reduce the equity exposure, put it into debt. This is what funds are about, little bit brief about it. Okay, there are other funds also there, but this is one of the fund I'd like to explain, because in this ULIP, we invested in this fund only. This is one of the illustration. Whenever we get one fund, right, one ULIP policy we take, there's illustration. But now we are able to see generic illustration. One is 4%, one is 8%. But previously, I saw in our old fund, this is 2008, right? Almost 15 years back. That time, what we can see here is 6% illustration has been given, or 10%. So now 4 and 8 are showing in the illustrations. This, even though if you think fund is generating 10% returns, can you see here? First year amount, 40,000 invested amount, it is not gone to fund value at all. Can you see very clearly? So second year onwards only invested into fund value. Hope you understand that the fund amount of first year amount is not taken into the first year premium amount is not considered for the fund. Reason is first year amount is kept separately for guaranteed fund, fixed advantage guarantee fund. Then next year onwards it was there. So effectively, if you see here, how much we invested into fund, 40,000 into 4 years, 1.6 lakhs. This is the guaranteed fund kept it aside. Now, as for this, as per the 6%, end of, let us see, this is what, right? We can see roughly 4.4 lakhs. Surrender value will be fund value, right? Fund value is like, if they think the 6% benefit, these are what values will be coming up. If fund is generated 10% returns, amount will be 7.1. Okay. This is what projections as per the rates, 6% or 10%, but this is not guaranteed. It can go down also, it can go up also. Now we'll see whatever we invested, the policy smart advantage, which is the ULIP, how much it generated, you like to see? Yeah, let us see. Yeah, right now I captured the screenshot from the policies, but you can see this a little bit. Then I can show you live also at present today. What is the fund value? We can see that. Now, if you see, this is the smart advantage fund. This is the policy number 008555299. Okay. Then amount is the premium amount is 40,000. Totally started in 2008. 5 years was there, 5 years, right? But policy term is 20 years. It means invest for 5 years and leave it for next 15 years. So what happens after leaving it? This is what interesting. I will explain you more details about it. Okay. Now if you see here, the policy number, if you click that more details, here it is showing premium 40,000. Do in the sense 13 are not paid because 2008, 2009, 2010, 11, 12, 5 years over, right? 12 is the last actually. sum assured 4 lakhs. Maturity value when 20 years, right? So 2008 we started, 2028, 20 years fund. Now if you see what is the fund value, can we see here? In the next screen we can see, I think let me little reduce it size. Yeah. Can you see here? Yeah. This is the what smart advantage plan policy basic details. Then if you look at fund value, I'm maximizing a little bit to show you clearly. This is 10 lakh 792. It was, I think, 22nd May, I think this data was, okay. Now, to see more details on the, what are the things, how the 10 lakhs, is it same? These are different funds. Totally, two funds are opted actually. One is a bond fund, one is opportunities fund. Right now, bond fund is nil because entire amount is invested into Kotak opportunities fund. Can you see here? So this is what fund value. This is actually taken couple of days back. We'll see what today in the live I'll show you. Okay. Now, if you click on the more details, this is what happens when login. I logged in on the 22nd on this website, and for this policy number and for Hemalata, these are what values. Product is Kotak Smart Advantage, premium including top-ups, total 2 lakhs. But first 40,000 is kept it aside. Fund value, total allocated is 1,60,000. Now, if you see here, what are the returns you can see here actually? 10 lakh 792.23 was the value has been given. This is the what update. It is done on the 22nd May. Now we'll see currently what is the value. And even if you can see here also, which funds, how much amount. Sometimes what happens, if you think market is going down, you can take out from the opportunities fund and move it into bonds funds also. You have got the control to switch. But since I am very confident about the market is going up, I kept it in the opportunities fund itself. I not withdrawn. Lost almost 15 years not withdrawn at all. We can see good returns like this. Now, how much returns? What is the return IRR? Let us see that. Can you see here in the Excel spreadsheet? 2008, 40,000, which is kept it aside. So totally invested 40,000 for 4 years. Now, at the 2023, when I checked the 22nd May, it was 10 lakh 792. What is 16%? Did I type it? No. If you look at here, what is 16% here? There is a formula IRR B1 to B6, B1 to B16. Full. This is the what formula all about. So IRR means internal rate of return based on the values applied here. Totally first for this year's we invested it. Then now what is the amount is coming back here. So 16% is generated on this one. Even here, no entire thing very clear, right here. Total investment amount, right now value. Now, why do you think this returns has come? Just very important information I would like to pass it on to you. If you see here, when this policy started in 2008, my first premium is not considered. So 2009 January onwards, that investment started into the fund. This is roughly 2009. Then now this is the 2023, isn't it? This is the start point, this is the end point. But our invested amount only 5 years, right? Till 2012 only. So second, third, fourth premiums totally. So roughly average somewhere total we can say average 1.6 amount kept it at this rate. From here to here, market went up, but ups and downs, up, down, downs. Can you see here? Even the COVID crash also there. Again, once again crash. So markets ups and downs. Even though these ups and downs, still we could see 16% year on year. This is what returns we could see in the ULIPs. Total investment was 2 lakhs, but out of that 1.6 was the fund value, but still it generated almost 10 lakhs returns when till 2023. Next 5 years are there. So what may happen? It can go up also, it can go down also, but I am very confident that it can go up. Why do you think it will go up? Let us understand this. See here, this is the duration. Year 2009 and 10 and all, what are the interest rates? Would like to know? See the next chart, next screen. And see that this is the interest rates in India. Of course, different areas are there, but this is the 2008. If you see, it is interest rates first increased, then it become flat. Once again, it has reduced it slowly, maybe to the 9 time. So when interest rates are coming down, what happens? People, where do they invest? Investors, because FD rates are coming down, bonds values also come down. Then what? Everybody will start investing into equities. Why? When inflation is very high, interest rates are very high. That is what happens. Growth is not much, right? So equities are underperformed during that time. It means low. When interest rates start coming down, growth can be seen. Market may go up also. So in this phase, this is what actually my investment phase actually. But overall, if you see, interest is coming down over the period of time. Of course, stock market, you could have seen ups and downs, but over the period of time, 2009 to 2023, you could see good growth, right? Now, we'll see once again in the live how much returns there on the Nifty or Sensex. Nifty means, NSE 50 stocks. Sensex means BSE, I think 30 stocks, I think. Okay. Now we'll see more details on the how to check the fund performance live today and what are the Nifty 20 years horizon, 15 years, 2009 to 13 horizon. You can see the chart. This is the Excel spreadsheet which IRR calculated. Now let us say year 40,000 is removed. Even think that 40,000 are added into the fund. Now I'll just put entire 40,000 here instead of 0. Now what happens here? 13%. 13% is good. That is 13% is every year, year on year. Some sort of CAGR, cumulated annual growth rate. That's called 13% every year. But by generally that first year amount is kept it aside, right? We should not calculate. But otherwise, this is what returns are seen around 16%, right? This is what we could see with this current value. Now we will log into the Kotak Life website and see that what is the fund value today. Okay. This is the Kotak Life website. Here we can see our policy, ULIP policy funds details. Here, since existing customer, we need to click the existing customer. After clicking the existing customers, you should click the login. This is the login process. Then here since we are individual customers, click on the individual customers. Now here you have to give the login credentials. One is the mobile number or the email. I am giving the email which is associated to this policy. Okay. Next. There is a verification code which has been sent to the email. We should open the email and take out the code and type it here. This is the email coming from the Kotak when just now only, right? Timestamp also can be seen here. And this is the code. You can take out this code. Of course, it comes to your email ID once you do it, but this is the roughly, I wanted to show you the process. Okay. Take out this code and log in. Yeah, I typed the verification code and click the login. Now you can see the policies here. Now to see the more details here, that the policy is not seen, right? Then go and click it here. You can see all the policies here. This is the Kotak Smart Advantage. Are you able to see? Kotak Smart Advantage plan. All the details are given here. Now what we need to do? Go and click this view details. You can see the starting one also and premium amount also. See, this is the premium details, 40,000. This is sum assured. Now, I would like to say fund value. I wanted to know what is this policy having the fund value. That is more important for me. I am clicking this one. See here, can you see that? 10 lakh 6,644. If you see the 22nd May, it was a 10 lakh 590 something. Today, maybe last 3 days, market has just given little run up, little bit more. That's why you can see more. If market is down, this also may be coming down. We do not know. But right now, today, as of today, 24th May, this is the value seen here. To know more details about, click the view fund value. See here, total bond fund, Kotak opportunities. This is the NAV of the unit. These many units are there. So all clubbed together, NAV into number of units. This is the fund value. This is the fund value. If you want to go and click more details, you can see entire picture of the funds also. Okay, that also possible to check if you're interested to know more about it. You can see the entire details of the policy and fund. Login date, today we logged in, right? You can see this one, policy number, and what product, what is the premium, and how much allocated to the funds. All can be seen. What are the fund, each fund details are being given. This is what totally fund value is shown. Okay, now we'll go back to the Nifty chart and see from 2009 till 2022 how was the live chart. Okay, we can see that one. Now, if you see here, can you see here? Like let us say I started in the 2009 or fund. Of course, 88 I started. First year premium is kept it aside. So effectively 9 I started. 2009. Then 10, 11, 12 somewhere. This is the process. Okay. Totally. This is my investment period was this much, I think. Okay. If you can see here, 2009, 10, 11, somewhere 12 like that. So if you look at here, 1, 2, 3, 4, somewhere you can say average this one. This is what I can say. This is what my average, just guess, just to show you that one. This is my average price. From here, that time market maybe 4,900, something like that. Now, what is the value now? Nifty, almost 18,200 now. How much returns has come? Even if you invested into the Nifty itself, how much would have come? Let us see that. This is what you can see returns. Roughly 300%. It means if you had invested 1.6, it becomes 3 times 1.6 into, that is if you double means what happens? 3.2 lakhs. If it's another double means like 100 become 200. 100% means what? Doubled out. 200% means 2 times. 300% means 3 times, maybe a little bit more. So 1.6 become, we can say how much, let us see. what we can say is one thing is 1,60,000. First 100% means same amount. So we can say 3.2 lakhs. Now 1.6 lakhs into 200% means how much? It becomes 3.2, but plus 1.6 also added, right? So 4.8. Then 300% means what happens? Almost 6.4 lakhs. But our fund, how much our policy amount? Almost 10 lakhs plus. It means the fund performed better than the Nifty index. Are you able to understand? Why is the reason? That opportunities fund, they very active. They keep on changing it. Like, wherever opportunities are there, try to invest there. If that values came up, take out some of that money and put it into some other opportunities. So the fund manager keep on changing actively. That is why returns are more. I am thinking. What do you think? Think over it and see what is the opportunities fund generated better than Nifty or not. Okay, this is what I like to give you brief update on this fund. But I will tell you one thing. Just because of higher returns you have seen, don't go invest simply ULIP. First, understand whether what are the money which you are going to invest. Can you stay longer? Let us say you invested today and wanted to take out next year. Not possible because ULIPs minimum lock is 5 years. But after 5 years also, if the market is not performed well, then your fund will not grow. But if you can stay invested like this, 15 years, 20 years, 25 years, without worry, tension free, then it can go better also. Market can give good returns because over the period of time, the returns are possible. So this way, you can see excellent returns in the ellipse if you can stay longer duration. This is what I like to update you about the benefits on this ellipse. Not only insurance protection and investment also can grow with the ellipse. Thank you.